This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
TradeFlow Capital Management celebrates 5 years of strong returns and SME success. To find out more, please visit www.tradeflow.capital.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Russian Deputy Prime Alexander Novak said on Thursday the OPEC Plus group of leading oil producers saw no need for further output cuts despite lower than expected Chinese demand, but that the organization can always adjust policy if necessary. He said Russia reached its targeted output this month after announcing cuts of 500,000 barrels per day, BPD, or 5% of its oil production, until the year-end. Russia is part of the OPEC Plus group of oil-producing countries that announced a combined reduction of around 1.16 million barrels of oil per day earlier this month, a surprise decision the United States described as unwise.
Oil prices steadied on Thursday after the previous day's price drop erased the supportive impact of a surprise cut to OPEC production targets this month. Brent crude edged up 18 cents, or 0.23%, to $77.87 a barrel by 13:44 GMT, while U.S. West Texas Intermediate crude rose 12 cents, or 0.16%, to $74.42. Prices stabilized as Russian Deputy Prime Alexander Novak described oil markets on Thursday as balanced. The OPEC Plus group of leading oil producers does not see the need for further oil output cuts but is always able to adjust its policy, Novak said.
Moving on to the top news in the energy sector.
Residual fuel oil stocks at key trading hub Singapore fell to 4-week lows, with net imports easing by 19% after jumping last week, official data showed on Thursday. Onshore fuel oil stocks were down at 23.06 million barrels, 3.63 million tons, in the week to April 26, sliding 2% from the previous week, based on Enterprise Singapore data. Weekly net fuel oil imports, which are calculated by subtracting total exports from total imports, slipped 19% to 702,000 tons, after more than doubling in the previous week.
The U.S. ethanol industry is lobbying the Biden administration to ensure lower carbon aviation fuel made from ethanol will qualify for subsidies under the Inflation Reduction Act, arguing such provisions are crucial to meeting U.S. climate goals. The campaign reflects the ethanol industry's desire to expand into aviation following years of stagnant demand for the corn-based fuel as an ingredient in gasoline, and projections that motor fuel demand will fall in the future due to better efficiency and the ascent of electric cars. Sustainable aviation fuel, SAF, is considered vital to decarbonizing the hard-to-electrify airplane industry, and the Biden administration is targeting at least 3 billion gallons of SAF production per year in the United States by 2030 as part of its broader push to fight climate change. Next, we have the top news in metal markets. Global demand for refined zinc and lead will exceed supply in 2023, the International Lead in Zinc Study Group, ILZSG, said on Thursday. Global demand for refined zinc metal will exceed supply in 2023, with the extent of the deficit currently forecast at a modest 45,000 tons, the ILZSG said. After declining by 2.5% in 2022, world zinc mine production is forecast to rise by 3% to 12.86 million tons in 2023.
Iron ore benchmarks moved in opposite directions on Thursday, with Dalian futures rebounding after a 6-session slump, while prices in Singapore dipped, as uncertainty over demand for the steelmaking ingredient in China kept traders cautious. The most traded September iron ore on China's Dalian Commodity Exchange ended morning trade 1.3% higher at 718 yuan and 50 fen a ton, bouncing off a 19-week low hit on Wednesday. On the Singapore Exchange, however, benchmark May iron ore edged lower by 0.5% to $104.70 a ton by 0444 GMT. It has largely held ground though, having rebounded on Wednesday after briefly trading below $100.
We will now look at the top news in the agricultural sector.
Only its full implementation can save the Black Sea grain deal from collapse, Russia's foreign ministry said on Thursday, reaffirming Moscow's dissatisfaction with an accord that aims to prevent a global food crisis. The deal, brokered by the United Nations and Turkey last July, allows Ukrainian grain trapped by the conflict to be safely exported from the country's Black Sea ports. But Russia has repeatedly said it will not allow the deal to be extended beyond May 18 unless the West removes obstacles to Russian grain and fertilizer exports. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.